The broadcast is now starting. All attendees are in listen-only mode.
All right. Good afternoon, everyone. Today is Thursday. Again, it's CFRN Thursday. It's January 24th. And what we do is every Thursday for about an hour from 1 to 2 is we go over the CFRN trade setup in slow motion. The platform we're featuring is DT Pro. That is the platform that I support. It also is the same platform that Dwayne and Michael are using. The game plan for this afternoon, number one, is for those guys that are brand spanking new. This is going to be a good syllabus for you to lean on, especially if you're on your first or second day going into the training room. Because what I'm going to do is go over the trade setup in slow motion from start to finish, and then I'm going to take that same trade setup and then go inside a live environment and show you how to put the trades on, manage them, and then take them off. Okay. The idea is to get our hands dirty a little bit in a live environment, so you guys can see and understand why we're doing things, but like in a slowed down version. Okay. You'll get to ask questions along the way, so feel free to do that. Okay, 1 second here. Sorry for the interruption, but this isn't recorded, so this is live. So my phones are going to buzz. So if I do that, I will put you on hold and pick up my lines, just so I can get some orders in for people. Okay. So I want you to know what's going on ahead of time. So again, for those guys that are brand new, this is going to be something that you can lean on and learn from. And the idea is to give you an eyes wide open approach when you're entering the training room. Okay. If I do it right, at the end of the trial, when they say, hey, this is what you're signing up for, this is the price tag, hopefully whatever I added to it can help you make a better decision whether you want to pursue the CFRN path or not. Okay. If you are already a CFRN member, this is a good time for you to get some more screen time. I'm going to go over a lot of observations, probably 3 or 4 major ones that kind of hit me in the face when people said, hey, can you look at my stuff? Can you look at my trades? I'm having some trouble somewhere along the line. I'm not running on all cylinders. So some of the potholes that people fall into, I'm going to pull them to the forefront here and just show you what some of the common mistakes are. The idea is to kind of tip the scales in your favor to avoid those little traps. Okay. So again, for you guys that are returning, you'll get a chance to ask questions. You'll be able to, listen and view how I see the markets. It's going to be the same trade setup that Michael uses in the morning. It's just going to be in a slowed down version. Okay. You're going to hear me say the same stuff over and over and over and stuff until I kind of pound it in your head. Okay. So stand by. That's my phone again. So 1 sec. All right. So again, for those that are returning CFRN members, that's going to be your game plan for this afternoon. You get to hang out with me for an hour, and hopefully, if there's any questions you have, feel free to pop them in the messenger box there, and I'll entertain them. Okay. So that's the scoop. So before I get started, I have to go over the disclaimers. So that's why I kind of start the room a little bit early, is just to get through that so we can spend a good hour in the live market and talking about what's going on and what I'm seeing, and how to put trades on and take them off. So that's the idea behind that. All right, so the first disclaimer. So let me get my marker out here. All right. Basically, I could put this up and tell you to take a few minutes to look at it and shove it back down. I don't like to do that because I've been around for almost 25 years and I really have seen the good, the bad, and the ugly. So this disclaimer really is meant to scare the pants out of the brand new guys. Okay, the guys that are entering into our space, wondering what this futures market's about. They read something, they got an advertisement, something that says, hey, look over here, there's some opportunity. Well, this disclaimer really just says, basically, if you don't have a trading plan, if you're not using stop losses, if you're not watching the markets, you're not watching your trading account, if you're not engaged in what's going on in the marketplace, you can lose everything and some in your trading account if you don't have those variables in place. Okay, so that means if you open up a $5,000 account, it is possible that you can lose more than what's in that trading account and owe the house than what you started with. Okay, it's a scary thing, but the result is bottom line is we're in a leveraged space. Okay, we're trading futures, and again, if you don't have those variables in place, that can happen, and I have seen it happen. Okay. The good thing with CFRN is that, and we're going to go over this in a few minutes here, you have a trading plan, right? It's rules based. There's basically 4 rules. Okay. You're on a 4-tick range chart, so you really have to be in front of the screen and engage in what the heck's going on. You're going to use aggressive risk management. All right. So that means you're going to be using a stop loss, right? 8-tick stop is attached to every trade. And not only that, like I said, that aggressive risk management is going to come into place. So you'll be moving the stop. So again, you'll have to be engaged in what's going on in the marketplace. Okay. In addition to that, we execute everything off of a DOM. Okay. If you're brand new, what is the DOM? The depth of market is this tower here. Okay. If we think the market's going up, we'll left click in the green and we make money if the market goes up. If we think the market's going down, we'll left click in the red and we make money if that market goes down. Okay. Again, like I said, along the way, you're going to move the stop along the way. Okay. So not only are you engaged in the markets and it's a rules-based kind of methodology, you're going to have to be pretty good with this tower. Okay. If all fails, if you're doing all the right things, you place your stop, you have rules, you're in the market, you're in front of this tower, you do all the right things, and some goofy news does come out, and the market does hop over your stop loss, and that is a possibility, at least you're in front of the market, at least you're in front of the tower here, and you're going to hit this magic button, which means exit at market and cancel. Okay, you can get the heck out of Dodge as soon as possible. Okay. Not only does it get you out of the trade, it'll also cancel any outstanding orders you have working. All right. So again, bottom line is the futures and the disclaimer. Okay. You have to have risk capital. Okay. It can't change your lifestyle if you lose that money, but if it does, it's not going to, it's got to be risk capital. Okay. And you could lose everything and some in your trading account if you're not using stop losses, you're not engaged in the market, all that stuff I just talked about. Okay. My experience with the guys that come down the CFRN path, they're kind of numb to this disclaimer because they've been to this guru, they've been to this guy, they've learned this methodology, they've been here and done that, so they're numb to this. Okay, so by the time they get to us, they're pretty beat up. So what they try to do at CFRN is they'll try to have you disengage in some of your bad habits, and then teach you the rules and their method and keep you on that path. They will tell you to practice for a while until you're consistent and profitable on a simulator. So they're going to tell you to make all your mistakes on the demo first and then kind of take it from there. Okay? All right. That is the disclaimer, long-winded version. So let me go on to the next one, and let me also send Paul M. a link to the, like this. All right. Let's logged in. Okay, good. All right. So that's fine. All right. So Paul's in. He's squared away. All right. Next disclaimer is my relationship or our relationship with CFRN. Okay. Daniel's Trading and CFRN. CFRN, the indicators, they have that key to that car, basically. It's their indicators. They're the educator. They're the it's their trading tool, their tools, their software. They're a third-party app. Bottom line is that if you ultimately decide you're going to go down the CFRN path, you're going to reach out to them directly. Okay, so if you exchange money, doesn't come through BERT, then go through CFRN. All right, there's basically a fine line between the both of us. Okay, anything on their site, the videos, the webinars, the Thursday night workshops, Logic 247, all that stuff. Okay, you would reach directly out to them. Okay, in a lot of cases, if Dwayne's on the radio and Mike's running around, a lot of guys will reach out to call me and say, hey, can you send them a message to have them call me? That's fair game. Okay, so if you can't get a hold of somebody over there, you can call me, and then I'll send somebody a text to say, hey, give Paul a call or give Todd a call, something in that matter. Okay, so we'll get your questions answered. Okay. A lot of times they'll just have you call me anyways because they know I'm here and I'm picking up the phone. So it's just nice to know that someone who picks up the phone and knows what you're doing and could get you kind of squared away. The other thing about that is, as I said, their indicators are in our platform. This is DT Pro. I support the platform. I support the brokerage, the execution, the indicators inside this, indicators inside the platform. So if you're having any problems with downloading or, executing trades or something with the demo or what have you, you'll reach out to me. Okay, so I handle all the brokerage sides of the business. CFRN, they handle all the education part of the business. I happen to kickstart this hour session on Thursdays because there was a demand for it. I kind of got tired of just watching a lot of the emails saying and the questions, it's going too fast, going too fast, going too fast. And so I figured, you know what, an hour out of my time will answer probably a lot of questions because I can cover a lot of ground, and it'll give you a chance to guys answer questions. So if there's anything lingering that you're unsure about, it was just a good way of, talking to a lot of people all at once. Okay. And so that was the game plan why we did this. And I think a lot of people get a lot of value out of this because it is a slowed down version, and especially the brand new guys, because when they go in the trial, they're like, whoa, we got all these lines and, you're putting trades on and off, and things are moving fast and Mike's trying to get a goal and, there's other things going on and, it kind of adds up. And then people really don't get a good look at it. So, my thought was, hey, I can add some value to this and slow things down for you. And, obviously you can get a better look at what's going on. And if you want to take that route, then go for it. If you don't have the comfy cozies, then you don't. No hard feelings. But, that was kind of the game plan on my end. And, it's a mutual benefit, right? If you do well, I'm going to do well. Bottom line. So it works for everyone. All right. Enough of this. Let's move on. And let's move on to the trade setups, okay? Let me get my marker out again. All right, so again, the guys that are brand new, you're going to get a lot of value out of this because I'm going to break down what's going on in the training room step by step here. And then, like I said, once we get past this point, then we're just going to jump into the live markets and go to work and see what we can do, okay? So first order of business is the time frame. We're on a 4-tick range chart, all right? So if you have DT Pro, okay, that's what I have here. In fact, let me shut down the live account. I'm in demo mode, okay, as you can see, just to be very transparent about everything. 4-tick range. How do I get there on DT Pro? You might be on a daily. You might be on an hourly, maybe even a 5-minute, okay? The way to get to the 4-tick range, just hit the drop-down box here, go down to Custom, and select Range Bar. Make that one look like a 4, okay? Select OK. This is the ES, S&P 500, on a 4-tick range chart. One of the first traps people fall into, they go to Custom, they select Tick Bar, because everything at CFRN is associated in ticks. And they end up making that 2 look like a 4, and it looks, goofy like this. If you're staring at a screen that looks like this, it's, obviously there's a problem. Usually it's you hit ticks and not the range bar. Lot different picture, okay? It's definitely smoother, okay? So we're in a 4-tick range chart, and the height of each candle is 4 ticks in height. They may look higher and smaller, but the height of each candle is 4 ticks in height. So that doesn't change. So the reason bringing that up, a lot of times in the training room, you're going to hear Michael call out the highs and the lows. Okay? That's his way of being proactive, a little bit predictive on how the next candle is going to close. Okay? So a lot of times what Michael is doing, he's buying it above the market. Okay, this is the current market price here in the middle. He's either buying it above the market or he's selling it below. Okay, so he's going with the momentum. Okay, or he's going down with the momentum. Okay, that's what he's doing. And he does that because he knows the height of each candle is 4 ticks in height. Okay, so the advantage of that is if a market just springs out of the hole and, rallies, he's able to stop himself into the market and go along for a ride, okay? A lot of times you might see that in the beginning and say, how the heck did you get into that? That's how he did it. He's buying it and selling it on a stop, okay? So the key is, and I'll go over this if we get a chance, whatever the high or the low is, just add 5. And that's the number you click on, okay? Okay, again, just add or subtract 5, and those are the actual prices you will right-click in, okay? So that's a little bit more advanced, okay, for guys that are brand new. If you're brand new, just learn about the rules first, and then we could talk about execution second, all right? If you keep it in its simplest form, once it qualifies, your best bet is just left click in the green or left click in the red. Okay, and I'm going to show you how to build a bracket in the same time here. Okay, So the bottom line is 104 tick range chart. Okay, that's how you get there. Second piece of the puzzle here is step number 1, which is the bullish or bearish cross. Okay, this red and blue line is referred to as the MA1. Okay, some buzzwords you'll hear in the room. The green line is referred to as the BBC. Okay, that's short for bullish and bearish cross. Together, when the MA1 is crossing the BBC, that is defining step number 1. Okay, if the MA1 is red, you're looking for shorting opportunities. If the MA1 is blue and crossing the BBC, you're looking for buying opportunities. The one that's highlighted is the MA1 is what color? Red. So we're looking for shorting opportunities. Okay, so now I want you thinking a little bit about color. Okay, because ideal or the perfect scenario is when everything is the same color. If it's all red, if everything's all blue, that stacks all the probabilities in your favor. Okay, as we go down the line here, I'll point that out. But the first step is the cross. Okay, and it starts with the MA1 crossing the BBC, and the one that's highlighted is red. So we're going to be looking for shorting opportunities. Now note, I didn't say go short, go long, go short, even though the market did go down, right? Now you're getting hypnotized by what's going on. But I'm looking for opportunities to go short because it kind of leads us into step number 2. Okay? Step number 2 is this. After the cross, define this as being the cross, and it's a bearish cross because the MA1 is red. The normal thing for the market to do is to gravitate toward that BBC or that green line, as it's doing here. That's normal. Okay, so now not only are we looking for the normal thing, but we're looking for a touch of the green line, but also a close in the direction of the trend. So that arrow there is highlighting step number 2, the touch and close in the direction of the trend. All right, because that's the normal thing for the market to do after the cross. Okay, notice we have a red MA1. Now we have a red candle. So now you're starting to see the picture here a little bit. Now everything from this point on is down in the slingshot or the oscillator portion of the chart. Okay, so when step 1 and step 2 are defined, our eyes gravitate toward the slingshot. Okay, and basically the trade exists down here. Okay, and I'm going to point that out. Okay, so again, more buzzwords, but down into the slingshot. We're down here below. Get the marker out again. This red and blue line is referred to as the cycle. The green line, well, it's just referred to as the green line. Nothing really special about it, about the green line, but together they're going to make up step number 3, or the divergence or separation that Michael refers to in the room. Okay, so this is a big deal. But stand by, okay, my phone's buzzing. All right, I'm back. Didn't hang up. I'm back. All right. So we're inside the slingshot right now, and we're talking about divergence or the separation that Michael is talking about in the room. Okay. This red and blue line is referred to as the cycle, and the green line is just the green line, but together makes up the divergence that he's looking for. Okay. So here it is. The cycle, the fact that it's red and has a nice slope to it to the downside, what this is saying is, look, we're in a downtrend, all right, on the 4-tick range. We're in a downtrend. That's why it's red and pointing down. That's good if you're looking for shorting opportunities, okay? And it's true for the other end. If you have a buying opportunity, you want the cycle to be blue. And the reason is because blue is associated with buying, right? We want everything to be the same color, okay? So right now in this example, this is saying, hey, we're in a downtrend, okay? And that's good. This price action here, the normal thing, where the market goes up to the green line, touches it, and rejects it with a red candle, along with this green line pulling away from the cycle, it's suggesting, hey, this is just an air pocket in this ongoing downtrend. Okay, that's what it's signaling. Okay, so when we get step number 1, kind of lights the match. Step number 2, we look for the normal thing, right? Step 3, we kind of look down in the slingshot and say, hey, is the cycle red? So we got a red MA1, we got a red candle, and now we have a red cycle. There's nothing else to filter out. If we are trending, notice how I said that. If we are trending, if we're making lower lows or higher highs, you're presented with step 1, step 2, and step 3. There's nothing else to do but to go inside the DOM. Okay, remember the DOM is this thing here, this tower. This is where we're buying and selling things. There's nothing else to do but get in here and left click and get short. Okay, there's nothing else to figure out. Okay, so everything, okay, with step 1, 2, and 3, okay, when all that's present, we're going to take action. All right, here's what we expect to happen. The normal thing in the end is for this green line to ultimately come down and get into the cycle, as it does here. And in doing so, the market is going to make a new pivot low. It's going to make a lower low. It's actually at this point here, we're going to get out of the trade. Okay, that's where we're getting out. Because what we expect to happen is we expect the green line to do this. Pull away from the cycle, close the gap. Pull away from the cycle, close the gap. Keep doing this until, the trend has turned up, and now we want to see the cycle underneath it. Okay, we don't quite see it here, but we do see it here. All right, and we wait for the normal thing for to happen on the bullish side of it. Okay, so in a sense, you're selling this rally, selling this, as long as the market's stair-stepping down, right? And then we're buying this dip, and we're buying this dip as long as we're making higher highs. Okay, that's it. The trade exists down here. The price action up here, you're looking for the normal thing. Now, during the course of the day, you're not going to see the normal thing. So you're going to hear me talking about, are we trending, and getting in the habit of drawing a trend line. Okay, so you're going to hear that out loud. All right, and it's a good habit to get into because, well, number 1, Michael's doing it. Number 2, I told you to. And that's what you should be doing. And if you're fumbling along with the mouse, then you can call me and we could talk about how to do it. But those are the habits you should be getting into. All right. Every trade has an 8-tick stop attached to it. All right. So what does that mean if you're brand new? If you're trading gold and crude and you're dead wrong, you lose an $80 a contract. If you're trading the soybeans or the S&P 500, It's closer to $100. If you're trading the mini Dow, it's closer to 40 bucks. Okay. The same trade setup applies to any market. As long as it has some volatility and some liquidity, the number of buyers and sellers, nothing changes in the setup. Okay. And the big question I'll always get is, hey, can this be used on a larger time frame? Well, if things are really moving quickly, you can go to an 8-tick range chart. Okay. You can look at hourlies and you can look at dailies. With logic, right? Dwayne is using mostly a 30-minute, right? Or he's using a 5-minute chart to make decisions, okay, and how to manage the risk. So it could be used on larger time frames, okay? In the end, okay, if you're brand new, you're not learning to pick the top here, and you're not learning to pick the bottom, and you're not learning to trade it from point A to point Z. You're learning to take a piece out of the middle, and along the way, you're going to be moving the stop, moving the stop, moving the stop until you get out of the trade. That's what you're signing up for, okay? So, again, as I said earlier when I was talking about the disclaimer, okay, you're going to have to be in front of the markets. You're on a 4-tick range chart, right? So you're going to have plenty of trading opportunities. You're going to be using a stop loss. You're going to be using aggressive risk management. You're going to be following rules. You're going to be using this tower or DOM to execute trades. So you're going to have to learn all this, all right? Does it come overnight? No, it doesn't, okay? It takes a little bit of time. And so they do, CFRN will say, hey, practice, practice, practice. And that is definitely true. It's not the same. It's not real money. I get that. But the mechanics of going through, are we trending, drawing a trend line, going inside the DOM and pushing a button, all that part, that's important. Okay, because you can fumble the ball along the way if you don't. And that fumbling usually costs you money. It's a turnover, right? So it costs you money. All right. Any questions on that? So here we're just gonna jump right in. Okay. This is the ES chart. Okay. I'm gonna click on the different markets and then we'll go from there. Okay. So right now, looking at the ES, remember on that 4-tick range chart, and right now I'm calling the ES sideways. Okay. We did make some higher highs here, but started making some sideways here, and then we broke out of that range, but now we seem to be caught in some sideways chop here. So until we break dynamic resistance here, we'll probably stand a parade rest and do nothing in the ES. Okay. Observation number 1. See this zoom out button here, red magnifying glass? You want to get in the habit of left clicking. Sometimes when you're in the room, you get hypnotized by Mike's charts. They're blowing up pretty big, right? So you might be looking at a market that might look like, looking just back immediate to your left here. We might be trending. We might be making higher highs. But if you take a few minutes to click out, you might find out we're just expanding that sideways channel. And we might not necessarily be trending. That might be the difference of being in a good trade or not. Okay? Might make the difference of winning and losing because you took a few seconds to zoom out and find out, you know what? We're not trending. We're trading sideways. Okay? So again, the first thing you should be asking yourself, are we trending? And get in the habit of hitting the zoom out button. Okay? That's the first thing you want to do. Okay? That's where people make a lot of mistakes. They get caught up in the chop. They didn't recognize it because their chart's blown up for good reason. But they have to lose a little bit to learn that they have to zoom out and figure out, all right, maybe Bert was right about that. Let me take a few seconds to zoom out. Okay. So right now the indices, we're just in chop. Gold. We are in February gold. Notice the difference between this chart and the ES. Okay. Pretty easy and obvious. It's trending down. Notice I hit the zoom out button. Okay. We were caught consolidating here for a little bit, right? And then we started breaking down. So right now, the gold's trending. So we're looking for selling opportunities. The reason for that is now we have step one in play. Okay, and what is step one? The cross. Okay, the MA1 is crossing the BBC. That's happening right here. Okay, so what we're doing is we're looking for the normal thing for the market to do is to gravitate toward this BBC. All right, so we'll look at that a little bit. Okay, if it happens, we'll pop in there. Okay, so the gold, we're looking for selling opportunities, and we define the trend as, hey, we are trending and it's trending down, so we can get excited about something. Okay, I'm going to move on to crude. Okay, crude oil, notice the first thing I do is zoom out. Okay, not asking you, there's a good question there. Nope, I'm not asking you to go to a 30-minute or a 5-minute or what have you. All you have to do is hit the zoom out button to define a little bit. You want to see some real estate to your left here. Okay, I see a lot of sideways action here. We've just kind of expanded that sideways action. I don't see anything easy and obvious here, but what I would, as far as trending, we start spending some time here underneath this level here where we're tapping on right now. We're going to get the bearish cross here if we break down in price. Then we'll start looking to get short the crude. Okay, so we're kind of on alert status with the crude. We found that old support. All right, so we're not going to take any action. We're starting to get the cross, and the cycle is starting to turn over. So if we get a breakdown in price, okay, we can look at getting short crude. Okay, so for a moment, no, we're not doing anything. Natural gas, same thing. Kind of in chop. Notice how I zoom out. Okay. I'm going to switch over to the currencies. I'm on the March euro. Okay. Now here, this was good. We made some lower lows, right? Here was the prior low. We made some lower lows, so it's game on to the downside, right? This will show up a lot of variables. So number one, we are trending because we were making lower lows. So we take that off our list. Number two, we have a bearish cross, right? What I said, the normal thing for the market to do is gravitate toward that BBC or the green line. You're looking for a touch and a close in the direction of the trend. This accomplished both of those on this one candle. There's a touch and down close. All right. Now, as soon as you get that cross, I want you to get in the habit of activating this trend line. Okay. You have to left click on it to activate it. And you notice that my mouse went into a pair of crosshairs. That's when you know you have it activated, okay? And what you want to do is get in the habit of drawing a trend line. That's how your trend line should look on that trade, okay? There's the bearish cross. As soon as you get two candles, okay, I like to look for them green, side by side, okay? You can connect the dots, okay? Not only do we get step number 2 and step number 1 in play, but we like everything to be the same color, right? So what color is the cycle? Red. So now we have all the variables in our favor, and the green line is pulling away. All right. The close of this candle here sets the trade in motion. This is where we get short. Okay. So what we would end up doing is going right into the DOM and left clicking and getting short. Okay. Now, I drew the trend line in the process because back here we didn't know it would get to the BBC, right? The market might have so much bearish momentum, it will not get to the BBC. So you have to get in the habit of drawing a trend line, because if it fails and closes on the other side of this trend line, okay, you're going to take action. Okay, so again, this is the normal thing. Gravitate toward the BBC and close in the direction of the trend. Okay, so we draw trend lines. Number one, we don't know if it'll get there. But number two, if the cycle ends up turning a different color on us, then the trend line is also required. And a close below that trend line is also required. Okay, so that happens, we'll talk about it. Okay, now you're saying, well, the market just didn't fall apart here. No, it didn't. Okay, but the truth of the matter is that's a short. And at this point, your stop would have been down to break even because we had 4 ticks in the trade. The result, it's a break even trade. Okay, break even is you move the stop to your entry point. Okay, so again, that one lit the match. All right, that one was pretty good to highlight because it covered a lot of bases. But let's go back to the indices and see what's going on. More sideways action. Okay, notice how I zoom out. And here's another point to make. See dynamic support and resistance? These are dynamic resistance and these are dynamic support dots. If they are side by side, like what you're looking at here, chances are you're in chop. Okay? If you're in chop, that's one of the biggest disqualifiers. You're not going to push any buttons. Okay? We need to be making higher highs or lower lows, period. That's the first order of business. That's got to be number one on your piece of paper. Okay? So right now, nothing. Okay, let's go to crude oil and see if it broke down. Okay. So, ultimately, we said I think we were here when we were just talking. It bounced and then finally broke through, right? So we said this was support, be careful. We did have that bounce and then it broke through, right? All right. This was the bearish cross because we were making lower lows. We defined that we were making lower lows and we were trending. We're looking for the market to do what? Gravitate toward the green line and close in the direction of the trend. No. 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 That is the first close in the direction of the trend. You're looking for a red candle. Why? Because the MA1 is red. Okay? That red close, okay, 2 things are happening. Number one, the second disqualifier just popped up. The black step line is inside, crossing the BBC. So that's the second disqualifier. Okay, so number one, if we're not trending or trading sideways, no trades. Second disqualifier, we're looking for the market to do the normal thing, pull back to the BBC, wait for the close, wait for the close. We finally get it. If that black step line has pierced the BBC, that's the second disqualifier. Okay? The other thing is, look at the pitch of this cycle. Okay? It's blue. So a blue cycle or a different color cycle, a trend line is required, right? So this is how your trend line would look in the process. That's how it looks. All right? It requires a close below the trend line to activate a short because this turned color on you. The problem is it's at a 45-degree angle. Okay? That is the third disqualifier and one of the biggest traps that people fall into. Okay? A lot of times Michael is in the trading room taking trades off and putting them on, what have you, with different cycles. Okay? He points us out in the room. Okay? But it has to be clarified here is that if this thing is at a 45-degree angle against you, okay, it's the wrong color, number one. But if it's against you, there's no trade. That's the third disqualifier. Okay? Now here's the thing. Here's the trap that really people fall into. This one's a pretty easy one. Okay? It's the one that just starts turning is the hard one. Okay? See if I can't find one. Kind of like down here where it starts red, blue, that's where it becomes confusing, okay? Two things really is, number one, if it's not easy and obvious, just don't do the trade, okay? Don't push any buttons at all, okay? You can also sign up for everything has to be the same color, or I'm not going to push any buttons. So what does that mean to you? That's certainly going to be less trades during the course of the day. But also the question I always get is, what constitutes a 45-degree angle, right? I could define it a few different ways, but the bottom line is this: when in doubt, if you're thinking, well, it's 30 or 25 or 20, my thought is if you even have to ask yourself that question, there's no trade, okay? Best way to do it really is this. If it's flat like this, okay, if we're laying down here, that's fair game. A lot of times you'll see Michael take this one, all right? Again, it's when it starts curling up is where the confusion starts, and you never know until it's a little too late, okay? So again, you have to decide, how you're going to play that. All right, so 1 sec. I would just say, hey, it all has to be the same color. All right. See if we broke out of that range. Still in that range. Okay, notice the first thing I did was zoom out. That's the ES. Let's try gold. Okay, gold has got a little bit of dynamic support printing. The cycle is a little bit sloppy here, so gold is off the table. Let's go fishing into the natural gas. Okay, here's that situation. Uh-oh, we're starting to turn blue, right? So there may be a problem with the short side. All right, let's see what happens. If we'll wait for the normal thing to happen, which is pull back to the BBC. What I do like is when I zoom out, okay, we are making some lower lows. Okay, this prior low here has me a little concerned. Okay, may have a double bottom here, so we need to be really careful with that. Okay, stand corrected with this. That might be a double bottom. So I'll say this: I like the natural gas. I don't like the color of that, and I don't like the double bottom. If we start making some lower lows, we have broken this level of support. I think we can get short. Okay, until then, I want you to don't take any action. Okay. So again, I define that. It was real easy. I just hit the zoom out button. Okay. Just do that. Okay. Let's try to switch guns here. I'm going to switch to different markets, see if I can't find, because what I'd like to do is get inside the DOM and show you how to push a few buttons and how to build the bracket. Again, here's a perfect example of why you draw the trend line. After the cross, so after you've defined, hey, we are making higher highs or lower lows. That one's checked off your list. Number 2 should be, do we have bullish cross or bearish cross? Hey, we got a bullish cross here. Why is that? The MA1 is blue. Activate the trend line. Okay? After the cross, the normal thing is for the market to do what? Gravitate toward the BBC. Okay? As it's gravitating toward it, you are going to draw that trend line. Okay? This is just the British pound. I just grabbed any market. Okay? 2 red candles side by side. The market is trying to gravitate toward the BBC. We get a close above that trend line. Now, we have a bullish slope. We have a bullish cycle. That's good. We had a bullish cross. Heck, even the MA1 is blue. So there's a lot of variables that said this thing should go up. Now your questioning is, well, is that enough divergence? Not really. Okay. Would I take it? Probably not. Why? Because the trade is the green line will pull away and do what? Close the gap and touch the cycle. How much room is there for that to express itself? Not a lot of room here, right? So it did create an opportunity. It looks good on paper. Okay. That one had this had a lot of good variables to talk about. Okay. That is one of the reasons why you draw a trend line. Okay. That's in prime time right there. Okay. All right. So hold on. I'm going to zoom out. Okay. All right. We have a lower low here, right? So let's mess around with the Canadian dollar just for the shakes of it. All right. We had the bearish cross here. Okay. It's doing the normal thing, pulling back to the green line. It's trying. Okay. We have a red cycle here. This isn't the greatest thing because, we're kind of laying here, but that's how I would draw the trend line. Okay. Now, you're at the point where you're getting ready to push a button. Before you do any of that, what you should do is create a bracket on your DOM. Notice the little Tinker Toy triangle here on top. If you left click, notice the bottom of the DOM blows out. What you want to do is check buy stop and sell stop. Okay? Buy stop and sell stop. And then what you want to do is right click over that. Okay? Factor in ticks. Right click over sell stop. Factor in ticks. Whatever number pops into this box, your factor should be 8. Why should it be 8? Because every trade has an 8 tick stop attached to it. Doesn't matter if you're trading the Canadian, the bonds, the euro, the ES. Stops is the same. Doesn't change. Okay. What this means is as soon as you get into the market, it will automatically place the stop loss 8 ticks behind your entry. Okay. So that's one less click that you have to make. That's one less mistake you can create. Okay. So less buttons you're pushing, the better. Okay. Because then you can move quick. Okay. Now, that's how you create a bracket. Okay. Notice these are empty. Okay. This would be set. If you clicked on these would normally be targets. Okay. Michael doesn't use targets, right? A lot of times he's just trailing the stop, trailing the stop, trailing the stop. Okay. That's what you should be doing. All right. So we got the bracket set up. We're ready to get long or short. We're in the Canadian dollar. We're on a 4-tick range. The market has tapped the green line, and we're looking for a red candle. We're waiting for the close. It's red now doesn't mean we will close red. Okay? If it does, then we're going to get short. Okay? Now this is where Michael can be proactive. Okay, listen carefully. This is what he'll do. If the high is 74.97.5, the low has to be 74.95.5. That's 4 ticks. I told you earlier, add or subtract 5 from the high or the low, and that's the price you're going to click on. Okay, and that's what I just did. All right, the high is 97.5. Minus 4 is 95.5. Subtract one more tick. You're going to right click in the red and create a sell stop. So if you're brand new, you will not get short the Canadian until it gets to 74.95. And notice up here, if that does activate, I have a buy stop right behind it. That's our protective stop. We did not close red. The importance of the close demonstrated right there. It looked red. A lot of you will anticipate a red close to get an edge, and a lot of times it will backfire on you. Make sure it closes. All right. The reason why he can be proactive and wait for 74.95. If it goes 5 ticks, it has to create that red candle. Okay? So that's why he does it. That's confusing, and I don't want you to labor over that too much. I'd rather, if you're brand new, focus on the setup. All right? All right, that covered a lot of bases there as far as drawing trend lines and stuff like that, and creating a bracket. I don't want to stare at the Canadian all afternoon. There's other things moving, so let's go back to the S&P. Okay. Broke out of that sideways congestion, right? The normal thing for the market to do, pull back to the BBC with an up close. Okay. So this close here lights the match for it to go up. I just went in to buy it at the market just so I can get into it and show you some pieces here. All right. So right here, that was the up close. That was the bullish cross. Okay. Do we have bullish divergence? Yes. The cycle is blue and the green line is underneath. So what you do is you go inside the green. You can do it now and left click. Notice I had the bracket already set up. Okay. So now what we're going to do is wait for the market to go plus 4 ticks in our favor, and then I can move the stop to break even. Okay. So hold on. All right. That was a pretty, I just went in. The entry should have been right here, 26.36.5. 1 tick off. But I just did it just to get it done, okay? Because I want to show you something in real time, okay? So again, let it do what it wants to do, but we can talk about it while it's happening. We said, hey, we're not going to touch this thing because we're trading sideways, right? We're going to wait for it to break out, okay? Decided to go to the upside, right? So it did it. We have a bullish cross here. That's step number 1. Step number 2, pulls back to the BBC. We wait for the up close. In the process, we activate the trend line. We did that. We look down below. The cycle is blue, and the green line's underneath it. There's nothing really to filter out, okay? It's all there. Win, lose, or draw. I zoom out, there's no higher high. You know, we're not butting our heads against resistance anywhere. The only thing that I don't have up here are the weekly trading zones, but we'll just hang out. See what happens, okay? There's a lot of good stuff there to say this is a good level. I don't notice how this turns on you. That's not good for the home team, right? We would like to have everything blue, okay? So let's see. We're just kind of waiting. Any questions on that? I know it's going against you now, but that's just the way it is. You'll have to learn to accept the losses when everything is all stacked up there, because that's going to happen. And it's not going to be fun. It's going to be hard to push the button the next time if you get a couple losing trades. It's easy for Michael to do it because, you know, he's the man, right? For the rest of us, you're going to lose some confidence. It's going to be hard. Okay. Let's see. Stop is right here, 8 ticks away. Nothing you can do about it. We're just waiting, trying to get the risk off the table. Now, if we get a close on the other side of the MA1, okay, we got a decision to make here, okay? See, let's hope that happens, though. Because the rule, the money management, right, is plus 4 ticks in your favor or a close on the other side of the MA1. MA1 is this red and blue line, okay? Sorry, I have the tooltips up, so it's... Now we're just kind of sitting here watching paint dry. This was blue when we entered. That was good. This curling over action is not good, but we're going to wait. Again, we zoomed out, said, hey, we broke out, right? Broke these higher highs. Come on, pop up. Question is, could you, if you missed it here, could you enter it now? Okay, at a better price? That's a real good question, valid question. The answer would be no. It's because this is a different color, okay? And it's curling over. So my suggestion would be no. I like that question, though. Said, hey, if it's good here, why isn't it good a little bit better? Well, I get that, but this is turning down, okay? And I would like to see it at least get over that trend line, which is above the MA1. But we defined that trend line right there. And a close above the trend line wasn't required. Why? Because the cycle was blue. All right, so there is a close above the MA1. Okay, I'm going to leave the stop in where it's at. Okay, goes plus 4 ticks, then I'm going to show you how to drag the stop. In fact, I'm going to do a little bit here. So here's your stop right here. Okay, the number 1 in the white. Just want you to put your mouse over it and left click. Hold the mouse down and move it up 2 ticks. Release. That's how you move the stop. Okay. Left click over the number 1, drag it up or down, release. That's all you have to do. Okay. So we entered it at 36.75. The stop should be at 34.75, and that's where it's at. Okay. How do you turn off the tooltips? Okay. See here, Vic? Double arrow looks like a rewind button. Left click over that. Okay, the side of the chart opens up. Under current profile. Okay. If you're on this or a different one, you're going to have to go to this drop down box, scroll up or down, but get the current profile. Okay, and find crosshair, show tool tips, left click on, turn them off, close the box. Okay, got to open up the properties box. Okay, current profile, crosshairs, turn everything off. Okay, the reason why this market is laboring here is because this has turned colors on us, right? It's giving us grief. Okay. And that's surprising because, that's what's happened here. You'll be faced with this, okay? When the MA1 turns down against you, here's the close above it. What do? Okay? You're going to have to decide what you want to do in that case. Because you can't even move the stop to break even because it's not even, it's above your, not even above your entry. All right, so hold on. I'm going to get rid of the trend line. We'll come back to this. If we get stopped out, it's going to let us know. But I don't want to look at this all day and miss out on another opportunity. Okay? This is the crude again. Sideways. Okay? Natural gas. Man, we were down here just a few minutes ago. Look at that. Another reason why you draw a trend line. Okay? Now this is starting to waver. So I'd say it's starting to do the normal thing, but we're not making some higher highs here. So natural gas, I would consider it, but something's got to change there. There's our S&P trying to figure out what the heck it wants to do. It's giving us grief because of this. Okay. So we're going to go to a different market. Okay. The gold eventually gets to the BBC. Okay, it does the normal thing. Two things that stick out. Okay, guys. Number one, we got some support building underneath us. And number two, this is sloppy. And it's blue and it's actually pointing up. So the gold is offering nothing as far as the trade is concerned. Okay, it's just a mess. Okay, so let's stay away from that. Looks like the S&P finally started ripping here a little bit. Okay. The normal thing for the market to do is the cycle to get into the green line to get into the cycle, right? I would just say right now, just cancel that market, get out. Okay. Sorry, that was kind of like a delayed reaction, but okay. So the idea really was, what's the green line supposed to do? Pull away. And what we expect to happen, green line to get into the cycle, and the market to do what? Make a new pivot high. Okay. It's not doing that. Okay. This had turned colors on us. It seems like we're trading back and forth here. So that was the reason for me to say just punch it out. Correct, Mark. Okay. I was long right here. Okay. Because that's what the chart was telling us. That's where everything was kind of set up. Okay. It was right here, the close of this candle. That candle. Okay. And then it kind of labored here, and the reason for it, because the cycle turned red on it, and that would be normal. What we expect is a green line to pull away and get into the cycle, right? That's why I said just cut it loose no matter what, because it's doing what it's supposed to do, but it's certainly not making a new high. So let's cut it loose and reload, right? Let's look at something else. No matter what happens there, that's... All right, so let's go to the euro. The euro has a lot of energy here, okay? The bullish cross is there. Zoom out. We're heading up against resistance. So again, you might see this and go, ooh, good trade, okay? Trending, I agree. 1, 2, 3. Uh-oh. We have our resistance here, right? So what we might be doing is expanding this sideways channel. So what I would expect to happen is at some point here, the market to pull back, okay? Somehow, some way, some reason, the market got a little bulled up here, which is fine. That's what we want. I'm just looking along here. All right. Let's find something else. One sec. All right, so let's go to the natural gas again. Okay. This should be your trend line. Okay. A few things that stick out here, and I'm, again, just pointing it out. Don't do anything. Okay, just listen. Okay. 1, 2, 3. Number one, we're not trending. Okay. We're not making higher highs. Okay. If I look back, yes, we are. That's something to get excited about. Okay. Right now, no. Somehow, for whatever reason, we're stuck into this candle. Okay. Now, as I said, anytime we start gravitating toward the green line, okay, you're looking to draw a trend line, right? That's what we did. Is the trend line required? Absolutely. Why is that? Because when we look down into the cycle, did a slingshot, that has turned a different color on us, right? So this trend line is required, and a close above that trend line is required before we get long. Okay? Now, the reason why I brought this up is I had a feeling this was going to start arching over like it is. Remember, as I said earlier, get in the habit of drawing a trend line. 2 reasons. We don't know if it'll get to the BBC, but it is required if it turns red. It is the cycle. Turns red on you. So now she's curling over, right? Now you're faced with that not so easy and obvious setup, right? Okay. Is it a 45-degree angle? Is it a 30, 35, what have you? Again, when faced with that, just take the risk off the table and don't push any buttons. Okay? Your trend line would start off like that. Okay? You'd have to adjust it like that now. Okay? That touch the BBC, I won't get into that, but the idea is you start drawing a trend line until this candle touches the BBC. I'm going to say it did. Okay? So your trend line would be like this. See if I can't. All right, so the point in that exercise, number 1, the curling action of the cycle. Beware. Number 2, I wanted to show you how, again, it takes 2 candles as we gravitate toward the BBC to draw the trend line. Okay? And I would say third, you draw the trend line as long as the market, okay? You stop drawing the trend line until it starts hitting the BBC. Okay, I might have confused that point. Okay, so we draw the trend line until it gets to the BBC, as long as we see the touch. If we don't, then you're going to keep adjusting the trend line. That was messy, but I'll see if I can't find another one to demonstrate. Let's go to gold. Okay, let me make this point, and then we'll leave it be. Okay, number 1, I went to the YM, the mini Dow. Okay, obviously this is a chop fest, right? We all agree on that. The YM and the NASDAQ are moving real quick, almost untradeable on a 4-tick range. Okay, what you can do if you're really crazy about the YM, slow it down and go out to an 8-tick range chart. Double it up, 8-tick range. It will slow things down. Okay, the trade setup is still the same. Okay, the rules that we covered here are absolutely the same. Okay, you're looking for a market that's trending. You're looking for the market to pull back to the BBC. In the process, you're going to be drawing a trend line, right? You're looking for all that stuff. The only difference is your stop loss. If you're on an 8-tick range chart, then your stop loss should be 16. Okay? So if you have a bracket set up here, you change that 8 to a 16. Okay, you have to double up the risk because the way they have it catered, you're risking 2 candles. Okay? So remember that. If you decide to trade, no, Paul, there's no targets. Remember, you're trailing the stop, trailing the stop, trailing the stop. Okay? What you expect to happen, okay? You expect a normal thing to happen, right? Which is the green line pulls away, right? And then eventually gets into the cycle, okay? And in doing so, the market's going to make a new pivot low, right? we don't know how low that's going to go. What if you get a runner and that thing goes all the way down? So you want to keep going, okay, until this thing closes the gap, okay? So rewind the button here, like this. See this? Now this, ignore all the stuff down below, but you're looking for this action, okay? You're looking for runners. So generally speaking, Paul, my experience with it, that's about right. Get about 16 ticks into it or what have you. That cycle's probably real close, that green line's real close to the cycle, and it's time to get out of it. And you'll run into that. It'll comes with experience, okay? But again, just the textbook version of this, no target. You're trailing the stop, trailing the stop, trailing the stop. But Bert, Michael puts targets in the training room. He does. Why does he do that? He's trying to get his goal. Okay, that's why he's doing that. Okay? All right. Looks like the S&P took off again. So hold on. See, this is why it was giving us grief, and then all of a sudden it started taking off. Okay? So we're making higher highs again, so we look for the market to do the normal thing. Pull back to the green line, right? And in doing so, we activate the trend line. So if we get another red candle here, we'll connect the dots off the top, okay? Now to confuse you a little bit more, I'm a Dow trader. Well, you can go to an 8-tick range chart and do the same thing, okay? We get another red candle, we would connect the dots off of those two tops, okay? So here we go. So I switch guns on you a little bit. We're in a 4-tick range on the ES, looking for the market to do the normal thing. All right, hold on. I'm going to try to find something else. The euro was more working. Oh, darn it. Okay. All right. There's your trend line on the euro. Okay, I'm switching craziness here on you. Okay. Now the question is, are we trending? No, we're not. Okay. Are we trending looking at this picture? Yes. Looks good, right? Okay. This tells me yes. Game on. This tells me no if I zoom out. Okay. The result is to be determined, right? Because the close here, bullish cross, pull back to the BBC, touches and closes in the direction of the trend. We drew the trend line, okay? The cycle is blue. The green line is underneath, has everything, right? Right now, your stop would be at break even or your entry. Right now, it looks good, right? Again, I'm just going to point this out because these will be things that you're going to be faced with and you'll have decisions to make on, okay? So Michael is in this one, okay? Because it's trending on his picture, okay? And again, I'd just be conscious of the fact that zoom out, okay? What you had confidence in is the cycle being blue and having a good slope to it, okay? That should give you a little bit of confidence, okay? Ideally, everything wants to be the same color, right? But if you got a pretty good slope to it, okay, then you might take this one, all right? Even though we're not making higher highs, okay? But again, I would have liked to have seen this get above this old high here, okay? To be honest with you. All right. Time is it? 10 after 2. Holy smokes. All right, so let's look at one more. Look at the Dow. Let me go to an 8-tick range. And we're going to be stuck there for a little bit. All right. Let's just wrap it up with that. Okay. So here's the scoop. Takeaways. Number 1, if you're brand new, you can lean on this video to learn about the setup in slow motion. Okay. I break it down from start to finish. This one has been around since 2012. One of the big questions I always get, has it been changed, formatted, screwed with, over the years to kind of form fit with the market? This one hasn't. Along the way, the 137, 164, all those other trades have been created, okay, by other members. Okay, they found something inside the indicator set they liked. We talked about it in the Thursday night workshop, and some of these other trades have been developed. Okay, some people gravitate toward those other ones because for some reason, they click with it. Okay, this one's been around from day one. That's why I talk about it. For you, that's for you to decide. Okay, you just have to decide on that. Okay. Takeaways, I would say this. Number 1, first thing that should be on your piece of paper is market needs to be trending. And in identifying that, get in the habit is hitting the red magnifying glass here. If you have DT Pro, that'll give you a larger look at what's going on your left, right? We're always looking this way for support or resistance. Okay, so get in the habit of doing that. Number 2, once you've identified we're making higher highs and we have the cross, right? Whether it's a bullish, right? This is a bullish cross. Okay, the next order of business is activate your trend line. Okay, we do that as we gravitate toward the BBC, which is the normal thing for the market to do. Okay, and then the subheadings to that is the reason why. It's because we don't know if it'll get back to the BBC. Okay, might have so much momentum it can't even get back there, or the cycle turns color on us and the trend line is required, right? 3 disqualifiers. Okay, number 1, the biggest one, the non-trending issue. Okay, that's always a trap that people fall into. Number 2, the black step line piercing the BBC. Okay, that one's a pretty easy to pull up and see. But the third one is the cycle turning color on you, and it's a wrong direction. Okay, certainly if it's hitting you in the face and it's at a 45-degree angle, that's a disqualifier. Okay, you don't want to push any buttons. Just remember, on a 4-tick range chart, there's going to be plenty of opportunities throughout the day. Okay. Last thing I would say is, if you are trading the Dow or the NASDAQ right now, what you might consider is moving out to an 8-tick range chart. Okay, same rules apply. The only difference is the risk is 16 ticks. Okay, 16 ticks. And if you're really excited about the larger time frames, like a daily or an hourly, well, your risk is going to be commensurate to the time frame you're on. So if you're on an hourly and you get an hourly signal, you're going to risk hourly dollars, right? Not 4 ticks. Okay, that's not going to add up. Okay, so that's something to consider too. And then I think in the end, while you're practicing, just get in the habit of get in the habit of reviewing your trades, win, lose, or draw, especially if they're bad. Why? And if you're not sure, send the screenshot to me and I'll tell you why. They may not be a reason. I mean, that S&P trade that we took, everything was there. Okay, resulted in probably 3 or 4 ticks of loss, but that had everything going for it. What about trading into the support and resistance dots? Okay, that's Bart's question. Trading into dynamic support and resistance are more or less catered toward momentum trades. Okay, I won't talk about the momentum trades because they're guys that they're very aggressive trades. Okay, that's when the market, or like this would be here's a momentum trade right here. Okay, draw the trend line. Okay, as advertised, but we got to close on the other side of the MA1, right? This line here, this candle, that would be a momentum trade. It closes on the other side of the blue or red line. Okay, with that, your stop goes to break even right away. Okay, so you have to be really aggressive on the DOM. Okay, so you really got to know what's going on over here. That's your tower, the way you buy and sell things. Okay. You can also trade dynamic support and resistance on larger time frames. Okay, I don't know, corn. Here's a daily corn chart. Dynamic resistance, dynamic support, dynamic resistance, dynamic support here, dynamic resistance. So they can be used on larger time frames. Okay, I know I don't know if Ryan is in here. Ryan is not in here. He could use them using the grains. Okay, so you can use them on larger time frames. Okay, but inside the room, they're used as far as the momentum trade in conjunction with that. Okay, you don't trade into dynamic support or resistance. Only the slingshot back to the BBC trades qualify for that. All right, so that's it. So I hope you guys got some value out of it. Ask questions along the way. Some of them really good questions. I'm sorry. Yeah, the proactive orders where we're right-clicking above and right-clicking below. That's where Michael is starting, and he gets asked that a lot. Number one, how did you get into that? Right? That thing took off. And two, well, how did you get into that is the question. And really, if you just add or subtract 5 from then the current high or low, okay, again, add 5, then you'll get it. Okay, that is the number you click on. And instead of left clicking, you would be right clicking. And if you have an order ticket up, it'll tell you, buy it on a stop. Okay, if you don't have that pushed, well, then it's not going to tell you. Okay, you took the training wheels off. All right, so the key is right clicking and then the 5-tick rule. Okay, and then you might have to adjust as the market goes up and down, up and down, up and down in the range. Okay, those for Todd, you've been around for a while, so you get that a little bit. Some of the newer guys in here, I would say, let's learn about the setup first before you start pushing those buttons. All right, that's it. I'm calling it quits. We'll talk next Thursday for another hour, and then I'll put this on YouTube tomorrow morning. I'll send it to Google people or whatever, our back office who does that, and get it posted. All right. If you have questions, email or call me.